Hello and welcome. My name is Zafar Iqbal, and you're watching the Mojo Story. Now, the rupee is falling and touching new lows. On Wednesday, it closed at an all time low of 77.60 against the US dollar, even as there are massive foreign fund outflows. Crude oil prices are also surging. The LPG is selling over 1,000 rupees per cylinder. How is this going to impact you and me? What does this mean for students wanting to study abroad? And is this trend going to continue? Further, to discuss this and much more, we're joined by an eminent panel. We're joined by Sandeep Ghosh, who is a commentator, who will be joining us shortly. Yes, we're joined by Sandeep Ghosh, a commentator, Madhavan Narayanan, senior journalist, Anjali Bhardwaj from Satark Nagrik Sangathan, Professor Arun Kumar, economist, Robinder Sachdev, President, the Image India Institute. If I can start with you, Professor Arun Kumar, why is the rupee falling at such an alarming speed? What against the US dollar? What's the sense that you get out of it?
First thing is that the rupee is falling against the dollar, but not against other major currencies. Number of other currencies, major currencies in the world have also fallen against the dollar. And the reason is that when there's uncertainty, people like to go towards where they can find certainty, and the dollar, as a kind of a reserve currency of the world, acts like a reserve currency for the world. So that's
Yeah,
number one. Number two, India is having a very large trade deficit, and therefore there's a difficulty in the balance of payment that is cropped up. And the third thing is that capital is being pulled out of India from the stock markets. So overall, there's a deficit which is leading to a decline in the foreign exchange reserves of the country, and that signals to the people in the foreign exchange market that the rupee is weakening. Next, you see there is this global uncertainty that has been created by
yeah,
the war, and also by the fact that China is having lockdown, and as a result supply bottlenecks have come all over the world. These supply bottlenecks are not new. They have been there for almost a year now, because of various reasons post pandemic, but these supply bottlenecks have become greater, and that's why the production has declined in various parts of the world, and that means the world economy is weakening. So there
So,
are several reasons, both global as well as internal, because of which
so,
the rupee has weakened.
so it's a combination of factors that you mean to say. And is it safe to say that we are in a crisis situation as far as economy is concerned,
Yes,
or we can pull out of this?
no, you see, it's not going to be easy to pull out of it, because
Yeah,
the government is following what are called supply side policies. Whereas the problem is not that supply side policies can resolve. What you need to do is, you need to lower, say, taxes on the petroleum goods, which is very inflationary. These have been very high. Second is that supply bottlenecks have come because number of small and marginal businesses have closed down during the pandemic. So they need to be revived so that the supplies can be revived. So there are many steps that the government could take, which would actually lower the level of inflation, and that would help in the economy. The growth rate of the economy is also slowed down because the unorganized sector has been unambiguously hit, and they are a very substantial part of the economy. So if they get hit, then the growth gets hit, and therefore the economy becomes weaker in the international
yeah,
eyes of the international investors, and that's why
yes,
the investors are pulling out from the stock market. They're going back to the U.S. economy or to other economies,
yes,
and also
yes,
there is this problem that various countries have realized that they need to shorten supply chains, because these long
yes,
supply chains have caused problems during the pandemic. So they're pulling their capital back to their own
right.
country.
So government can take many steps to rather bring the situation under control. Madhavan Narayanan, what is stopping the government from taking those steps according to you?
Well, there are several reasons, Zafar. I was just thinking, Professor Arun Kumar explained it rather well, but I'll
Hmm.
have to tell you some basic figures. First of all, which is
Yeah.
that some nearly $50 billion have been pulled out of India by the U.S. policies, because not only is the dollar the U.S. reserve currency, Federal Reserve Bank of the U.S. has become by proxy something like a big brother of the Reserve Bank of India in some ways. So
Yeah.
it is like rain, when it rains, it's very good, but if you don't know whether it's monsoon or not, and it suddenly stops raining, you should stop wondering. This was never India's reign. This was never India's money to come in. So whenever a government is enjoying these rains, it should think ahead. My own feeling is that the government wasn't thinking ahead, mainly because I was just looking at the. Let me first explain the context and then say what the government can or cannot do.
Yeah.
There is this
Yes.
GDP growth chart in front of me. In
Yes.
2014, when Mr. Modi came to power, the GDP growth was 7.4%. It was not very high, mainly because of the world economic crisis and other things. Now, it plunged to a minus negative growth in 2020. It has never crossed that level. The GDP growth has not crossed 7.7% in the past 7 years or so. So, which means that as it is, there is an accumulated stress in the economy, because for a country in which 1 million people are entering the workforce every year, um,
Hmm.
7% growth is not enough. After that, we have to worry
Hmm.
about income inequality and
Yes.
distribution and down. So as it is,
Yeah.
we are on a tight wicket. So there are three
Yes.
reasons why there has been a tight wicket. One is the overhang of the uh, world economic crisis. Then there was the NPA problem, the bad loan, due to which the economy could not expand. There were also adventures like the demonetization, which didn't work. That also caused a slowdown in growth. Then there was a pandemic. So it is like asking to score runs on a difficult wicket where it's raining. Okay, so my own feeling is that the good times caused by low oil prices, which was one third of what it is now when Mr. Modi came to power. I mean, soon it was 30 plus $35 to a barrel. Now it's $100 to a barrel. So this window of opportunity has been missed, both in
Yeah.
creating income. But now inflation has come. Let's come to the supply side. The point
Yeah.
is, you can blame the Ukraine war certainly
Yeah.
for sunflower oil or edible oil, and
Yes.
Indonesia has caused palm oil export. But the point is that India has come through much worse times before, because we still have $570 or more of foreign exchange reserves. So that can be used properly, but we do have import problems. And my own feeling is that the government is, for instance, it recently banned wheat exports. Okay, this is the same government which 2 years ago was telling farmers you can do anything, you can sell it to anyone, you can even export wheat. Okay,
As a matter
now
of fact, I was coming to that point that government sends teams to explore the possibilities of exporting wheat, and in a matter of 48 hours, there is this announcement that there is a ban on wheat
okay,
exports. Sandeep,
now
yeah, yeah,
let me tell you a very harsh truth.
yes,
The government commentators have been saying that inflation is a global problem. I completely agree with that. Okay, but
yeah,
that is the economic problem called inflation. I divide inflation into three kinds of inflation: political inflation, social inflation, and economic inflation. They are
yes,
interlinked, but it's very important how they are interlinked. Economic inflation is when the statistics go up. Political inflation is when key products like, let us say, edible oil or onion prices go up, where people
yes,
are vulnerable to certain kind of campaigns of propaganda or imagery. The third is
yeah,
social inflation, when there has been an across the board increase in various products, particularly essential consumption like food. India is right now going through all three inflations together, according to me. Okay. Now, the way to do it is imports normally, but there are two problems. One is that we are facing an unusual problem, because even Indonesia and Ukraine are not easily available for this thing. The supply side bottlenecks cannot be cured immediately. So that leaves us with one important point, which is, what is the ideology of inflation you have? This government has been pursuing the market ideology, but this round of inflation has proved that Indira Gandhi's style of inflation management is still probably needed, where the government artificially creates controls and pulls levers and ushers in subsidies to stabilize prices. Even that is not possible immediately, but essential commodities can be
Yeah.
supplied through, let's say, government channels.
That
We can.
that's a very vivid description of the whole situation. I want to go across to Sandeep Ghosh. Coming on to the point of wheat exports, the government uh, announces that it's going to explore possibilities of exporting wheat, and in a matter of 48 hours, there is a ban on the wheat export. That does not instill confidence and good image of the country, and in turn, it impacts the economy. That's just one example. We can blame external factors like the war in Ukraine and the COVID, but there are certain things that the government could or should do to bring order to the system and restore some sort of normalcy as far as this crisis situation is concerned.
Zafar, first to answer your wheat question, from what I know,
Yeah,
the government has not banned wheat exports, it's only banned wheat exports by private operators. Because
right.
in that case, the wheat was going, I can be corrected, any destination, whereas our objective right now is to give it to selective destinations where it is required, rather than just get our granaries and warehouses emptied
Yeah.
by whosoever can afford to pull it out, and
Mm,
opportunistically traders and other people making money.
mm.
Now, the question, I think overall, I think, I would like to say that while there is a problem, certainly there is a problem, and you cannot, it's like, when you had COVID, you couldn't say that everybody is not going to be affected by COVID. Now, whether it is happening more or less or what could be controllable is the issue. So the world is going through a very abnormal period. Everybody will be affected. And whether we are affected more or less is a question. At the same time, we should not take these extreme positions. Like some people compare the India is in the same boat as Sri Lanka, and we'll go the Sri Lankan way in a few months. I don't think any sensible person will accept that. Okay. Now, the economic factors have been explained very well, and I'm not an economist, so I will not get in there. When we look at comparative parameters, even today, the GDP projections are 8.8%. Moody's has done. So it is, and which they're saying is much better than any of the larger economies. So we must be doing also certain things right to be where we are. And as another point, to go back to 2014, while there were certain very positive factors inherited by the Modi government, part of it also was used in cleaning up the system, be it the NPA, be it the oil reserves and the oil bonds and various other things. And then there were issues of whether it's GST, which delayed, or the demonetization, which is still, the jury is out on it. All those things delayed. And then you had two very severe years of COVID. And during COVID, one of the objectives of the government was to ensure that there is food security. And the amount of, we don't take into account the amount of money which was pumped in for welfare measure, food security, and cash transfers to people's hands. So those things, ultimately does put a strain on the system. So these factors are there, and certain amount of therefore inflation will happen, and that inflation has to be tackled. And as Professor said very rightly, they are so far trying to tackle the supply side, which may not be enough. Thankfully, certain things are easing out, like Malaysia, as I think just cleared re-export of oil. So some things will ease, because the whole world is also trying to grapple with this situation. Nobody knows how long Ukraine will continue and what is going to happen. So I don't see gloom and doom everywhere, and we have to take a slightly understanding position here. You're on mute, Zafar.
Yeah, I'm saying that in April, the food inflation wholesale was at 8.8%. Let me go across to Anjali. Anjali, we have been discussing this at a broader level, but what does it mean for startups and those who are planning to start a business venture in India, given the economic situation of the country and the rupee, which is falling against the dollar?
Well, Zafar, what I believe is that there has been a very, very strong impact on people, especially the poorest and the most marginalized of the kind of economic recession that we are seeing the country go through. Um, agree with what Professor Arun Kumar mentioned, and also the fact that so far a lot of what the government has been wanting to do is really focused on the supply side. We know that 90% the of India's economy, of the workforce, is in the unorganized sector. Whether they are startups or they are, people who are working in the unorganized sector, putting small shops or as hawkers or as private entrepreneurs or doing small odd jobs. All of these people in the unorganized sector have been terribly hit,
Yes,
including
yes,
including the workers in the unorganized sector, the migrant workers, the others who might not have migrated but live very precariously because they are not part of any organized sector. With the kind of harsh lockdown that we saw at the beginning of 2020, imposed to combat the COVID 19 crisis, and I think the series of steps that we've seen the government take over the years, we know that one sector which has been really badly hit is the unorganized sector. And therefore, I think that it's important for the government, and in some ways, it's absolutely essential to focus on demand side interventions. We've looked at, there have been several surveys. We've looked at how
yes,
this kind of inflation, the lack of employment opportunities, the manner in which livelihoods have impacted the poorest, the most marginalized. A recent hunger survey that we did across about 12 states in the country, it showed that 66% of the respondents said that their income had decreased as compared to the
yes.
pre-pandemic period, and
In
60%
fact, in fact,
so.
in fact, those images are still vivid. When the second wave hit the country, all those people moving on the roads, the labor, the migrant population, as you put it rightly, the unorganized sector, the worst hit. And according to one of the reports, any Indian who's making 3 lakh rupees a year would be placed in the top 10% of the country's wage earners. That's the data, is a part of the State of Inequality in India report, which was prepared by the India arm of Global Competitive Initiative, the Institute for Competitiveness. So that's one of the reports, one of the figures. But obviously, I want to go across to Rabinder Sachdev. What's the sense that you make? The unorganized sector was the worst hit, particularly after the COVID, and that has created a huge impact.
Oh, thank you, Zafar. Yeah, I mean, absolutely, I would think so too. However, I would add another aspect, is surely I mean, regarding employment and the emerging trends and what's see,
Yeah.
essentially, business models are changing, industries are changing, the way jobs are supposed to be there is totally changing. So yes, the unorganized sector, but going down the line, we can anticipate even, let's say the 3 lakh and above, 3 to 5 lakh earning professionals, even they will be affected. I mean, there's a lot of concentration of capital going on globally, and automation going on, and various other, technology, tools coming in, whereby the numbers to be employed are getting less and less, especially at the repetitive kind of levels, right? So, but at the same time, newer industries are being created also. So we don't know what kind of a future we are heading into. And as it's said often that we are now in a VUCA world, VUCA, vulnerable, uncertain, complex, and ambiguous. So the challenge for economy, for the economy and for the government and globally, I think, is now, in addition to the traditional aspects or vectors of interest rates and inflation and other tools, right, to also factor in the emerging industries and what kind of jobs, and skilling up for those jobs and looking for those jobs or adjusting therein. So therein a huge gap will start coming. One can foresee it pretty soon, actually, right? So that would be one big challenge, I think, globally for, for the governments everywhere. Now, other than
Yes.
that, I think one
Yes.
of our colleagues wants to say something.
Yes. Madhavan Narayanan wants to put in a point. Yes,
Yeah,
sir.
yeah, I think I agree with what Professor just now said. But one important point is that the word for VUCA is volatility, uncertainty, confusion, and ambiguity. Now, I call this a Vuconomics problem. I'm glad he mentioned that, which is because it is being not captured in most of the economic discussions, because most of the
Yeah.
economists today are not tech savvy. They use technology, but they don't understand the impact that inequality creates on economics. For instance, today 20 lakhs per year jobs are available for software engineers at the entry level, whereas 10%, you just showed a slide which said that 3 lakh rupees salary, 90% of India
Yes.
earns less than 3 lakhs a year. Therefore, this
Yes.
has to be, now, this is the critical point. Market economics cannot solve these problems. It solves only the problems in the long run, but as John Maynard Keynes famously said, in the long run, we are all dead. So we right now have a unique problem of inequality plus uh, unaffordability. I deliberately use the word unaffordability, because when incomes do not catch up as much with prices, then we are reaching a problem of unaffordability, and that is what creates a social problem. Now, ideologically speaking, the where I am laughing right now, is that we are back to Indira Gandhi economics. Whether we may not like public sector and things like that, but because we are a demographically sensitive economy. Because right now in the US, the problem is inflation, but not unemployment. They are a full employment economy. We have a stagflation problem potentially, because unemployment plus inflation is a deadly combination. So therefore,
Exactly.
this has to be. I'm sticking my neck out today for the first time. I'm saying this. No, nobody is saying it before. We are back to Indira Gandhi economics, but we have $500 billion in foreign exchange reserves. So that's the good news. During
Yeah.
those days, the forex reserves were not there. The real question is, how do you connect the dots between these two? If the government doesn't do this, in that case, it is probably heading for social and political criticism, if not trouble.
We are back to the Indira Gandhi model, and you raised the point about foreign reserves, which have also been falling lately. It's less than 600. There's been a big sharp decline in that. Professor Arun Kumar, is that the situation that's going to continue like this, or it's just a temporary phenomenon?
Uh, so a number of factors need to be considered. Like was said, that India is slipping into a stagflationary situation because our growth rate does not take into account the unorganized sector independently. We assume that the unorganized sector is growing at the same rate as the organized sector. Now that was true only before demonetization, but since then that is not the case. You can also see that, for instance, currently our consumption levels have not recovered back to where the pre-pandemic level, and therefore the economy cannot be growing at 7.5 or 8%. If you take into account that RBI's consumption index, consumption confidence index was at 105 in January 2020 before the pandemic, and it has slipped to 72. In between, it had slipped to about 45. So the consumption levels have not recovered back. And if consumption levels have not recovered back, then the rate of growth cannot have recovered back to 7% or thereabouts. So the economy is really stagnant. It's either growing at 0% or negative rate of growth, whereas we are having a growing inflation problem because the wholesale price index is at a record of 17 years and the consumer price index is at a record of last 8 years. So while the economy is stagnating, the rate of inflation is rising. So we are in a stagflationary situation. Now the US is also roughly in a similar stagflationary situation. there, even though the employment figures sound very good, but it appears from data that roughly 3 to 4 million people have withdrawn from the workforce. They don't want to do the kind of work that is available. And they can afford to do that because you have unemployment dole over there, so they can afford to wait for a different kind of a job. Now, in the Indian context, what happens is that because we don't have unemployment dole, so people who lose work cannot afford to stay at home and not work because they would starve to death. So they would do something, and therefore they would, pull a rickshaw or do some headload work or something, some very small kind of a job that is there. So our scenario is very different from that of what is there in the US or in the advanced countries. We need to have a separate kind of analysis in which we need to create jobs at the lower levels. My own estimate is that 15 million children enter the workforce every year, but only about 500,000 will get the organized sector jobs, whereas the rest will be forced to go into the unorganized sector jobs. And therefore, what you will find is underemployment and disguised unemployment. So the employment data doesn't reflect that. So, in other words, our situation is rather difficult at this point of time because as the RBI has tried, it has raised the interest rate and raised the CRR, in effect trying to curb demand. But demand was already short. So, therefore, what the RBI will manage to achieve is to slow down the growth but not control inflation, because these steps are not going to end the Ukraine war or the supply bottlenecks from China or the supply bottlenecks in India. So, the inflation would continue. The only thing that would happen is that as the economy slows down, demand would tend to slow down, but the supply side bottlenecks are not going to go away. So that's where the difficulty of the Indian economy lies at this point of time. But that's also globally true, because even for the
Yes.
US economy, as the interest rates are raised, it is expected that the US economy will also slow down further. This quarter, they've
So,
already had a negative rate of growth, but next quarter also they're likely to have negative rate of growth because the Ukraine war is continuing, and therefore it's putting pressure on various kinds of supplies, whether it's metals or
yes.
energy, other things, and therefore the situation is going to continue to remain grim. And what I also
So,
see is that we are headed into Cold War. This Cold War between the rich nations on the one side, China, Russia on the other side, is going to lead to two circles of trade, of investments, and so on, and that will create further supply side problems. So these are the
yes.
problems we'll have to contend with in the coming
So,
years.
it's a complicated situation. Rather, we are in a more difficult situation, Sandeep Ghosh. The economy is stagnant, but inflation is rising. It may be the case in US also, but here in India, we cannot. Anybody who loses a job has to work. There is no cushion. There is no option for a person who loses the job. So we are in a more difficult situation.
Yeah, of course, our situation is very different from the US. And what we were discussing earlier, that we are going through a churn and a change, which it's not so much in a stable economy like US, as Professor was explaining, because there the nature of jobs have not changed so much, because the economy is in a but whereas in our case, but every element is undergoing a change, and I'm not too sure whether we have a proper fix on it. I'm not very fond of jargons or not very good at them either, but as they say now, the VUCA, since we talked about it, has now moved into what they're calling a Bani world. And Bani stands for brittle, anxious,
Mm.
nonlinear, and incomprehensible. Of this, the last word I think is most relevant for us today. We are in a very, very incomprehensible situation. What's happening? How the economy is moving. And these are right now is all anecdotal. Like one uh, index, I would say, if your digital payments have gone up so much, because digital payments have smaller transaction value. It is not
Yeah,
for big business you're doing a digital payment. So obviously something right is happening at the at the bottom of the pyramid. That's why people are
yeah,
using digital payments so much. Today, organized sector jobs will keep on shrinking because people are, most of the big companies are farming out their activities. So within the big structured companies, the jobs are shrinking. So when you're seeing many big companies doing extremely well on the stock market or in terms of the results which have been reported last year, it could not have happened in isolation without their ancillaries also doing well or doing getting employment. And everything is related, let's say, again, to some sectors like transportation, logistics. all those effect which is cascading down would be there. So to apply traditional yardsticks, though Anjali would be far more have her fingers on the pulse because she's into surveys and other things. But I think it's still a bit of a mystery where we are having. So we'll have to navigate through these troubled waters. And as we said, that every stage, like whether it's a VUCA or a Bani, yeah, you cannot have everything in a predictable mode, and there has to be corrections down the way. And my only confidence I get is in the last 2 years, though people had predicted dire consequences for India in every field, we seem to have managed reasonably well. And RBI is one of the institutions which I personally think, others may differ, has done exceedingly well compared to a lot of central banks around the world. So I would have confidence that under the circumstances on a relative scale, India would, but that does not give scope for complacence.
Yes.
We get complacent about it. At the same time, we should not despair either.
Anjali, the situation is not so grim. Sandeep Ghosh says there are some good things also happening. We just have to navigate through these current times, and we have to be careful and we have to keep our guard up.
Uh, Zafar, what I would say is that on the ground, the situation right now is alarming. I was mentioning to you even the Hunger Watch survey that we did. 66% of the respondents said that their incomes had actually fallen as compared to the pre-pandemic period, and out of that, 60% said that the decline had been more than 50%. So it's people. What Professor Arun Kumar was saying, that in India we don't have an unemployment dole, so it's not like people have the option to sit back. But what is very clear, even from just looking and talking to people or the surveys that we've been doing, is that the decline in incomes is very real. Now, when we couple this with the kind of inflation that we are seeing, the kind of increase in fuel taxes, and therefore the increase in diesel, petrol, which has a cascading impact. Inflation, when we say prices are increasing, they're increasing tremendously for essential commodities, which are really hurting people at the margins in the worst possible way. So, if I can share a couple of figures with you, when we talked to people, they said, A, that their indebtedness, so 45% households had outstanding debt. There were people who were saying, if we look at the figures, 30% of the people that we talked to said that they had lentils less than 2 or 3 times a month. Similarly, 50% said that they had milk or eggs their children had less than 2 or 3 times a month. Now, these are alarming figures. What does it show in terms of nutrition? What does it show in terms of just basic intake for
Yes.
people? 67%, and this is
Yeah.
interesting, said could not afford cooking gas in the month preceding the survey. Now, if we look at the
So it's
increasing
quite a
LPG
quite a
cylinders, every single
yes.
day prices are increasing,
Yeah,
and who is
quite
it hitting?
quite an alarming situation, and the data that you put out. Madhavan, you want to quickly come in? If you can
Discuss
unmute.
it. Yeah.
Yeah,
Well, I
guys.
think the important point to note is what can the government do under the circumstances. Okay.
Right.
Now, I have already mentioned that foreign exchange reserves are looking pretty good because I have covered the
Yeah.
economic crisis of 1991 when it was barely, for 6 weeks or less a month. Now, today we have enough for 10 months, although the needs have gone up and the population has gone up. So we can look at it as positively. But in the real issue is how do you actually take it to the average people, because Anjali has explained it very well. It's become coming down to dal and roti for an economy which is called itself the IT superpower. I was looking at another data which is the tax to GDP ratio. The good news is that in the latest financial year it has gone up close to 12% after being lower than 10% only 2 years ago during the pandemic, and then it was hovering a little about 10 to 11% for nearly a decade. So my recommendation to the government would be that assume that the 1% extra has not come your way and use that money to subsidize and use public distribution service PDS channels and all, so that you can either subsidize or bring a cushion till local supplies catch up or till imports are eased or have get into negotiations with an Indonesia or a Malaysia for palm oil and do something, which is what I call a return to Indianomics. The key point to
Yeah.
note is even if RBI is doing a good job, India is a country, it cannot follow a central bank oriented regime. You need a fiscal intervention for which the government has to take the responsibility away from the market on its own shoulders. That is why
Right.
I call it the return to Indianomics.
Yes, Ravinder Sachdev, what are the possible solutions? What are those measures that you think the government can take right now to bring a change in the economic situation of the country?
Thank you, sir. Well, I mean, rather than saying what the government can do, I would look at some of the constraints or some of the things which are pretty clear
Yeah,
in the future,
yeah,
apparently. One is inflation will keep going up. It seems so. And we've yet not factored in the Ukraine war and all its
yeah,
related various distortion of supply chains and stuff like that, right? Including food.
yeah,
So inflation will keep going up over the next few years, it
yeah,
seems. Secondly, the Indian rupee will keep weakening. Okay, I think there's an IMF report which says that India will not be a 5 trillion by 25, but will be a 5 trillion economy by 28 or 29, 4 years, delayed, and it's assuming that the rupee would be somewhere around 94 at that time, whatever
yeah,
that means, right? So these are, let's say, two of the variables which are out there. Now, as to what the government can do, absolutely yes, as my other colleagues are mentioning, supply side and relief, absolutely. Poverty and hunger, absolute. Whatever the government can do, should be doing, must be doing. But at the same time, also the government has to teach people how to fish, or the government has to at least create an enabling pond where there can be some fish, right? So creation or environment for enabling jobs. Over the past few years, one thing is that there has been sustained decline in private investments within India. So, what can the government do to enable or improve that environment so that private investments are coming in more and more? There is a low productivity in our economy. How can that productivity be enhanced, right?
yeah,
So, those would be some of the tools, in addition to, of course, look at China, for example. Whatever. I think last year during the COVID 2020 or so, there's some number they say they have not a single person below the poverty line, right? There is no poverty at some point
yeah.
in China. When will we reach that basic one? That would be, to my mind, the biggest, also concern. And then employment opportunities for wherever in the unorganized or early stage professionals or vocational institutions and all. So enabling that, otherwise jobs are going to be a huge problem. It's happening
Yes,
worldwide. But yes, new industries evolve. Who thought when computers came, the idea was a computer will take away your jobs, right? But that
yeah,
created the whole KPO, BPO sectors and stuff like that. So the changes which are
yes,
happening
yes,
right now, whatever be the jargon, would something will emerge. So
yeah.
there is some hope in that. So we need to invest heavily in R and
The,
D, I would say, and a few other things also.
yes, there is some hope. That brings us to the end of our discussion. Obviously, would agree that it's a critical time, and all eyes are on the government. How is it going to steer the economy? Thanks to all our panelists for being with us today, and thanks to the audiences for joining us. Thanks a lot.
Thank you.
It's great to see you here. Thank you for watching our work. If you haven't subscribed yet, don't forget to click the bell icon and subscribe to Mojo Story and support independent, robust journalism.